Bitcoin's doing something right now that makes absolutely zero sense. High volume, record low volatility. And sellers, they are pressing hard. At $86.085, we've got a market that's screaming in whispers, and most people are completely missing it. Here's the thing that's got me up at 6 a.m. staring at charts. When you see massive volume with volatility this compressed, something's gotta give. It's like watching a spring coil tighter and tighter. But here's the kicker. We're sitting just above the weekly low and the selling pressure. It's not backing off. This isn't normal consolidation, folks. This is a standoff. So in the next 15 minutes, I'm gonna walk you through exactly what's happening right now in Bitcoin, piece by piece. We're talking Fibonacci levels that actually matter, momentum indicators that are telling a story, and volume patterns that could signal the next major move. No fluff, no hopium, just the raw data and what it's really telling us. Because if you're trading or holding Bitcoin right now, you need to understand what's brewing under the surface. 6:15 a.m. New York time. Bitcoin $86.085. And I'm about to show you why this exact moment matters more than you think. Most people look at a timestamp and a price and think, okay, cool, just another data point. But when you're analyzing markets, timing is everything. The week we're dissecting, November 17th through the 24th, this isn't just random. This is a full 7 days of price discovering where it wants to go next, and right now. It's stuck in no man's land. See, the reason I'm locking in on this specific time frame is because we've got a complete weekly structure to work with. We can see where the highs tested, where the lows held, and where we're sitting right now in relation to that battlefield. And when I pulled up my charts this morning at 6:15, the first thing that jumped out wasn't a massive candle or some crazy wick. It was the absence of movement paired with the presence of volume. That combination, that's what made me pause my coffee and start digging deeper. Most traders are looking at this and thinking consolidation phase, nothing to see here. But when you zoom in on the microstructure, when you actually measure what's happening tick by tick, there's a battle happening. Bulls and bears are locked in, and neither side is giving an inch. The price looks calm on the surface, but underneath, it's a dogfight. And understanding the when and where we are in this fight, that's what separates traders who get caught off guard from those who see the move coming. $85, 697 to $87, 838. Two numbers that define the entire battlefield right now. This weekly range might look small, just over $2, 100, but here's what nobody's talking about. Bitcoin isn't bouncing around randomly inside this range. It's respecting specific levels with surgical precision. And when price starts acting like it's following a script, that's when you know the algos and the smart money are in full control. I've mapped out the Fibonacci retracement levels across this range, and I need you to understand something. Fibonacci isn't magic. It's not mystical. It's just math that reflects human psychology and algorithmic trading patterns that have been programmed into every bot on the planet. And right now, these levels are acting like magnets. Price keeps getting pulled back to them, testing them, reacting to them. So let's break down the entire Fibonacci structure. The 236 level sits at $87, 332. That's our first minor resistance if we bounce up. Light resistance, but it's there. The 382 comes in at $87, 020. This is where we start to see some real friction if price tries to climb. This is the first meaningful barrier. The 5 level, the midpoint, that's at $86, 767. And this is critical because we're currently below this midpoint. We're at $86, 085, remember. So we're trading in the lower half of the weekly range. That tells you something about momentum. The 618 level, the golden pocket, that's at $86, 514. This is often where reversals happen, where buyers step in with conviction. It's the level traders obsess over. But we've slipped below it. and the 786 level. That's $1.86, 155. We're literally just $1.70 below this level right now. We're basically kissing it. Here's what this structure tells me. We've retraced deep into the weekly range. We're not at the absolute bottom, but we're close. And when you're trading in the lower quartile of a range with the kind of volume we're seeing, someone's either accumulating for a reversal or someone's about to capitulate and break us lower. One of those two things is happening right now. Right now, Bitcoin has $458 of breathing room. That's it. Let me put that in perspective. For an asset that moves thousands of dollars in a day during volatile periods, having only $458 between your immediate support and resistance is insanely tight. It's like being locked in a phone booth. You can't move. You can't breathe. And eventually, something breaks. So where are these walls? Below us, we've got support at $1.85, 697. That's the weekly low. This is the floor. If we break it, we're not just dipping our toes below the range, we're opening the floodgates to those downside targets. Above us, resistance at $1.86, 155, remember that 786 fib level we just talked about. That's our ceiling. We're $1.70 away from testing it again. And here's the thing about compressed ranges like this, they don't last. Markets need to breathe. Price needs to expand. Volatility can't stay suppressed forever. It's like holding a beach ball underwater. The longer you hold it, the harder it's going to shoot up when you let go. Or in this case, if support gives way, the harder it's going to sink. The volume we're seeing in this tight range. That's the fuel. The low volatility. That's the fuse. In one spark, a macro headline, a whale move, a shift in sentiment, that's all it takes to light it. So we're not sitting in some boring consolidation. We're sitting on a powder keg, and the market is just waiting for someone to drop a match. If the bulls break out of this cage, they've got 3 targets painted on the wall. These aren't random numbers. These are Fibonacci expansion levels, the zones where the next wave of selling typically emerges, where profit-taking clusters, where the fight moves to the next level. And if you're planning to trade a breakout, you better know where these levels are, because that's where the exits happen. I've plotted the full upside structure, and here's what's waiting for us if we reclaim resistance and start pushing higher. These levels are where the smart money starts lightening positions, where retail FOMO peaks, and where the next rejection could come from. So let's map them out. First target, 1, 272 extension at $1.88, 419. If we break up and out, this is the first place I'd expect sellers to wake up. It's about $2, 300 above where we are now, roughly a 7% move. Not massive, but significant enough to trigger profit-taking from short-term traders. Second target, 1, 414 extension at $1.88, 723. This is another $300 higher. Now here's where it gets interesting. These Fibonacci extensions start clustering when you get into expansion mode, and that clustering. That creates resistance zones, not just levels. It's like layers of defense stacked on top of each other. Third target, 1, 618 extension at $1.89, 160. The golden ratio extension. This is roughly $3,000 above current price, a 5% pump. And if Bitcoin hits this level, that's when the YouTube thumbnails start screaming Bitcoin breakout to $90K, and the FOMO really kicks in. But let's reality check this for a second. To hit any of these targets, we first need to clear $1.86, 155, then reclaim the weekly midpoint at $1.86, 767, then push through $1.87, 020, then break the weekly high at $1.87, 838. That's 4 layers of resistance before we even sniff $88K. That's a lot of sellers waiting to exit. That's a lot of stop losses above each level ready to fuel the move. So while these upside targets absolutely exist, the path to get there, it's not a straight line. It's a knife fight through every single one of those Fibonacci levels. And if volume dries up at any point, the rally stalls. Now let's talk about what happens if that $85, 697 floor cracks. Because here's the thing most people don't want to think about when they're holding bags. Downside targets exist for a reason. They are not FUD. They are not bearish bias. They are mathematical projections of where the next support could emerge if selling accelerates. And right now, with the pressure we're seeing, these levels aren't theoretical, they are possible. I've mapped the full downside Fibonacci extension structure, and I'm going to be straight with you. If we start cascading through support, these levels get ugly fast. But they're also where buyers historically step back in, where liquidations cluster and flush out, and where the market finds its footing after a flush. So let's walk through them, because if you're trading with leverage or managing risk, you need these numbers burned into your brain. First stop 0, 618 extension at $84, 373. That's about $1, 700 below where we are now, roughly a 2% drop. If we break weekly support, this is the first place buyers might step back in. It's shallow enough that it could catch the initial wave of dip buyers. But here's the risk. If we hit it fast, if there's panic, we might not hold there. Second level 1, 0 extension at $83, 556. Now we're talking a full extension down, about $2, 500 below current price. This is around a 3% dump, and this is where stop losses start triggering in cascades. This is where overleveraged longs get liquidated. This is where the pain really starts for people who bought at higher levels without protective stops. Third level 1, 272 extension at $82, 973. We're now $3, 100 below current price, almost a 4% slide from here. This is where the fear really starts to set in, where social media flips bearish, where people start asking, is the bull market over? And where the weak hands completely capitulate. And the deepest target, 1, 618 extension at $82, 232. That's $3, 850 down, a 4.5% drop. If we hit this level, we've officially entered correction territory from recent highs, and that's when the real psychological damage happens. That's when the Bitcoin is dead articles start circulating again. Now, do I think we're heading straight to $82K? Not necessarily. But I'd be lying if I said these levels aren't on my radar. The fact that we're sitting just above support right now, with selling pressure this strong and MACD this bearish, it means these downside levels aren't just lines on a chart, they're escape routes if this breaks bad. The indicators right now are telling a story that most people are misreading. See, everyone loves to look at RSI and say, oh, it's neutral, so we're balanced. But that's surface-level analysis. You gotta dig deeper. You gotta look at RSI in context with MACD, with moving averages, with trend strength. Because when you layer them all together, the picture that emerges isn't balanced at all, it's conflicted. And conflicted markets are the most dangerous. So let me break down every single momentum and trend indicator we're working with right now, and I want you to pay attention to the contradictions. Because those contradictions, that's where the real signal is hiding. That's what tells us this market is about to make a decision, whether it wants to or not. RSI is at 44.11. That's neutral territory. Not overbought, not oversold. Just sitting there. In a vacuum, RSI at 44 tells you nothing. It's the equivalent of a shrug. But in the context of everything else we're seeing, it tells you the market is indecisive. There's no momentum conviction in either direction yet. SMA 50, the 50-period simple moving average, is at $86, 0.28. And we're currently trading at $86, 0.85, which puts us just 0.07% above the SMA 50. We're basically on the moving average. We're straddling it like a fence. And the SMA 50 is one of those levels that traders watch religiously, because it often acts as dynamic support or resistance. When you're trading within pennies of your 50-period moving average, it tells you the market is perfectly balanced right at that moment. Bulls and bears are evenly matched. Nobody has control. Now the MACD, moving average convergence divergence. This is where things get spicy. The MACD value is at 25, 57, the signal line is at 239, 19, and the histogram is at minus 213, 62. That histogram is deep negative. Like really deep. And the trend according to MACD. Bearish. Let me explain what this means. The MACD line is well below the signal line and the gap between them, that histogram, is widening. That tells you momentum is deteriorating. It tells you that even though price hasn't collapsed yet, the energy behind the move is bearish. Sellers have momentum edge right now. But here's the paradox, RSI is neutral. We're sitting on the SMA 50. So on one hand, you've got indicators saying we're balanced, and on the other hand, you've got MACD screaming momentum is bearish. Which one do you believe? You believe both. Because what they're collectively telling you is this: we're balanced right now, but the momentum is shifting toward the bears. It's like standing on a seesaw that's starting to tilt. You're not falling yet, but you can feel the shift. Trend strength. 1 star. Sideways. This rating confirms what we already know. This isn't a strong bullish trend. This isn't even a strong bearish trend. This is a market in limbo, coiling, waiting for a catalyst. And here's the synthesis. Neutral RSI plus bearish MACD plus sideways, trend plus high volume plus low volatility equals pressure cooker. This combination doesn't last. It can't last. One of these forces is going to dominate, and when it does, the move is going to be sharp and decisive. The MACD being bearish while we're still above support tells me sellers have the edge right now, but they haven't been able to break the floor yet. So it's a tug of war and the rope is fraying. Real quick, if you're finding value in this breakdown, do me a solid and smash that like button. It genuinely helps push this video to more traders who need to see what's actually happening right now. And drop a comment below. Are you watching for a bounce off support or are you expecting a breakdown? I want to hear your take. Bitcoin's volatility right now is at 0%. That's not normal, that's compressed. For context, ATR, average true range, measures how much Bitcoin typically moves in a given period. 0% is tight. That's a market that's barely breathing. But here's the kicker that's blowing my mind. Even with this record low volatility, we're seeing significant volume. Not massive, but way higher than you'd expect for a market that's moving this little. So what the hell does that mean? It means there's a ton of trading happening behind the scenes, but the price isn't moving because the buyers and sellers are perfectly matched. Every buyer has a seller. Every bid has an ask. Every trade is being absorbed immediately. It's equilibrium. But here's what you need to understand about equilibrium in markets. It's temporary. It's unstable. It's the calm before the chaos. Think about it like this. If volume was low and volatility was low, that would make sense. That's just a dead market. Nobody's trading, nothing's happening. But when volume is elevated and volatility is suppressed, that's opposing forces pushing against each other. That's buyers aggressively buying and sellers aggressively selling, and they're canceling each other out. But equilibrium doesn't last. Because the moment one side blinks, the moment one side runs out of ammunition or loses conviction, the imbalance creates movement. And movement creates momentum. And momentum creates the next leg, up or down. The 0% ATR tells me something else. When this coil finally unwinds, when this compression releases, the first move is going to be explosive. Because markets that compress this much don't expand slowly. They don't tiptoe out of the range. They snap. They gap. They run hard in one direction before most people even realize what's happening. And for traders, this is both the ultimate opportunity and the ultimate danger. If you're positioned correctly when the break happens, if you've got your stops in place, if you're on the right side, you can catch a massive move with minimal risk. But if you're positioned incorrectly, if you're overleveraged, or worse, if you're not even paying attention, you get absolutely wrecked in a matter of minutes. So low volatility isn't boring. Low volatility with high volume isn't consolidation. It's a loaded gun, and someone's finger is on the trigger. There's one critical note in the data that changes everything: strong selling pressure. This isn't my opinion. This isn't speculation. This is a direct observation from the data structure we're working with, and it confirms what the MACD, the Fibonacci levels, and the price action are all screaming. Sellers are in control of the tempo right now. They are the ones pressing. They are the ones testing. They are the ones trying to break this market down. Let me translate what price is significantly below the range, strong selling pressure, actually means in practical terms. We're not at the bottom of the weekly range, but we're in the lower quartile. We're below the midpoint. We're below the golden pocket at 0,618. And every time price tries to bounce, sellers show up and push it back down. That's the pressure. This tells me that despite the bulls trying to hold support at $85,697, despite the volume, despite the tight range, the initiative is with the bears. They are dictating the flow of the battle. They are the ones making moves, and the bulls are reacting, defending, holding the line. But here's the critical nuance, and this is where it gets interesting. They haven't succeeded yet. Support has held. And every time sellers fail to break support after multiple attempts, they burn energy. They exhaust their ammunition. They lose conviction. It's like a boxer throwing punch after punch, but their opponent keeps blocking. Eventually, the puncher gets tired. Their arms get heavy. And that's when the counterpunch lands. So this note, strong selling pressure, it's not a prediction that we're going to crash. It's an observation of the current dynamic. Sellers are in control of the tempo right now. But control of the tempo doesn't guarantee control of the outcome. If they can't break $85,697 soon, if the bulls hold the line just a little longer, we could see a violent reversal as those sellers scramble to cover and new buyers flood in. That's the game being played right now. An understanding who has initiative versus who has staying power. That's how you read what happens next. Let me tie every single piece of this puzzle together in a way that actually makes sense. Because we just walked through 10 different data points: price levels, Fibonacci structures, momentum indicators, volume patterns, pressure dynamics. And if you're feeling like, okay, cool, but what does it all mean? That's exactly what I'm about to show you. We're going to synthesize this into one clear picture of where Bitcoin stands right now and what the probabilities are. This isn't about predicting the future. Nobody can do that. This is about understanding the structure, recognizing the pattern, and knowing what signals to watch for. Because when you understand the setup, you can position yourself to react quickly when the break happens. And in a market this compressed, reaction speed is everything. Setup price $86,085 weekly range, $85,697 to $87,838 current position, lower quartile of the range just $70 below the zero. 786 fib at $86,155 immediate support, $85,697. This is the line in the sand immediate resistance, $86,155. This is the ceiling we need to reclaim technicals, RSI, neutral at 44. 11 no strong momentum conviction either way, SMA 50, $86,028. We're trading right on top of it, straddling the fence. MACD, bearish with a deeply negative histogram at -213. 62 momentum favors sellers, trend strength, sideways 1 star, no directional conviction, ATR 1. 0% extremely low volatility, maximum compression targets, upside. If we break higher, we're looking at $88,419, $88,723, and $89,160 as Fibonacci expansion targets. But we've got 4 resistance layers to fight through first. Downside, if support breaks, we're headed toward $84, $373, $83, $556, $82, $973, and potentially $82, $232. Each level is a potential bounce zone, but also a potential stop on the way down. Context: high volume with record low volatility. Opposing forces locked in battle, strong selling pressure, despite price holding above weekly lows. Bears have initiative, MACD bearish but support still intact, tempo vs. Staying power market in equilibrium, but equilibrium is temporary and unstable. What this all means? This is a market at a genuine crossroads. We're in a compression phase where neither side has been able to establish dominance. The sellers have momentum, the MACD confirms that. They have initiative, the selling pressure confirms that. But they lack follow-through. The fact that $85, $697 hasn't broken confirms that. On the flip side, the buyers are defending their ground. They're holding support. They're not letting this break down. But they're not attacking either. They're not reclaiming the midpoint. They're not pushing back toward the weekly high. They are just holding. The range is tight, $458 between support and resistance. The volume is significant. People are actively trading this range. The volatility is suppressed. The market is coiled like a spring. And all of that tells me one thing with absolute certainty. Something's gotta give, and it's gotta give soon. If we reclaim $86, $155, and start pushing through the midpoint at $86, $767, if volume comes in on the buy side and we flip that resistance into support, we could see a legitimate run toward those $88K plus targets. The shorts would get squeezed. The bears would flip. The momentum would shift. But if $85, $697 breaks, if that weekly low finally gives way on volume, we're looking at a flush toward $84K and potentially deeper into the $83K and $82K zones. The stops below support would trigger. The leveraged longs would liquidate. The fear would cascade. Right now, Bitcoin is a coiled spring with pressure building from both sides. The next macro catalyst, whether it's a Fed statement, a whale move, a derivatives flush, a shift in risk sentiment, that's what determines which way this thing explodes. So here's exactly what I'm watching for in the next 24 to 48 hours. Because knowing the setup is one thing, but knowing the triggers, knowing what specific price action would confirm a break in either direction, that's what separates people who catch the move from people who watch it happen and then FOMO in late. I've got two scenarios mapped out, and I'm watching both with equal attention. I'm not biased long or short. I'm just waiting for the market to show its hand. And when it does, I'll react accordingly. Here's what I'm looking for. Scenario 1. The breakdown. I'm watching $85, $697 like a hawk. If we break below it on increasing volume, if we get a clean breakdown, not just a wick, I'm immediately looking for those downside fib extensions to come into play. First target is $84, $373. If we slice through that quickly without bouncing, next stop is $83, $556. I'm not hoping for this. I'm just prepared for it. The confirmation I need. A 4-hour candle close below $85, $697 with volume above the recent average. That tells me it's not a fake out. That tells me the breakdown is real. Scenario 2, the reversal on the flip side. If we reclaim $86, $155 and hold it as support, if we flip that resistance and start building on top of it, I'm watching for a push back toward the midpoint at $86, $767. If we reclaim that, that's when I start looking for a run back toward the weekly high at $87, $838, and potentially those $88K plus extensions. The confirmation I need. A 4-hour candle close above $86, $155, followed by a successful retest where it holds as support. That's the classic flip, and that's what would signal the bulls are back in control. But here's the thing, I'm not trying to predict which one happens. I'm just prepared for both. And that's the mindset you need in a market like this. You don't guess. You don't hope. You don't marry a bias. You watch the key levels, you wait for confirmation, and then you react with discipline. This isn't a time to be complacent. This isn't a time to zone out and check your portfolio once a week. Because when compressed markets break, they move fast. And you want to be ready, not scrambling to figure out what's happening while everyone else is already positioned. If this breakdown helped you understand what's really happening in Bitcoin right now, if you've got a clearer picture of the structure, the levels, and the scenarios, hit that subscribe button. I'm breaking down the market like this every single week. No clickbait, no hopium, no BS. Just data, context, and actionable insights. And drop a comment right now. Are you watching for the breakdown below $85, 697, or are you waiting for the reclaim of $86, 155? What's your bias? Let's talk about it. I read every single comment, and I want to hear what you're seeing in the charts. Stay sharp out there. The next move is coming, and it's coming fast.